how are you going to make that? Like you've now got to make £15 per customer per year just to break even on their own.
Exactly, on a marginal basis without all your fixed costs,
So how are you going to do that?
So the average bank makes about £150 per customer per year. And about, I don't know, about a third to a half of that is really punitive fees and charges, which we won't have. And then you've got things like basically overdraft interest. And then you can use the surplus funds to invest elsewhere and then cross-sell other products. So, for example, the average person in this country pays about £60 per year for their overdraft. So if we charge 75% less on average, we can still break even just on overdrafts. And then you have things, for example, which you're exploring like your gas and electricity. 60% of the country have not switched, they're on a variable tariff. So if they switch to a fixed tariff, they'd save approximately £300 per household per year, but 60% of people can't, for some reason or other, have not done that. And so by helping them switch, they save 300, we earn about 30. So again, we break even if half our customers switch gas and electricity. Then you've got things like insurance products, or if you've got some money sitting around spare, we can help you invest that into a savings account or an ISA or a crowdfunding website. So, I mean, the long-term vision is basically to run a marketplace where we bring you relevant offers that are really good for you. You get 90% of benefit, we take 10%. And because we can run your account for about 15 quid a year, it doesn't take very much to break even.
Okay.
Fingers crossed. I mean, that's a theory, right?
Yeah,
we'll see.
It's your theory. So, obviously, you've grown user numbers, in a sense, way more than you anticipated on the prepaid pay card, with what you claim is very little or no marketing.
Yep.
But I'm interested in how you're going to get to millions of customers.
Yeah.
I read somewhere, I don't know if this is true, I think it was your words quoted.
Probably not true.
That you spend half your time talking to journalists. I mean, I thought you only spoke to me. Is that true?
No. It's probably 20 or 25%.
Okay. So, I mean, apart from telling the story to the press, like, what is your plan to acquire users at scale? Because I feel like 500,000 is impressive. Obviously, other people like Revolut claim they're close to 1 million. And obviously, it all depends what the customers are actually doing with the product, which is what I asked about earlier. So, yeah, what's the sort of the next stage of growth?
So I personally don't spend as much time as I would like on that. We have a very talented team back in the office in design and product who really think about this. The way we think about growth is basically the same way as Facebook does, not the same way as Barclays does. And that's to say it's all about product. It's about introducing reasons to share and then mechanics that make it really easy to share, and then a very, very low friction onboarding process. So in an average month, we will acquire about 70,000 funded accounts. A lot more like sign-ups, but we don't count them until they actually put money in. So say we're at 500,000 now, we need to get another 500,000. Assuming we don't increase our rate of growth, that's about 7 months until we get to 1 million funded accounts. We've paused sign-ups at the moment for the current account migration, so you cannot sign up directly, you'll be put on a waiting list. That's about to be unlocked in probably, well, I would hope tomorrow. Our product team probably says 4 weeks. So we'll start to onboard new customers. But then, I mean, it's not just 1 million customers, so that's 7 months away. What is that, like April or May or something? The question is not how we get to 1 million, it's how we get to 2 and then 3 and then 5 in the UK and then expanding internationally. So how do we accelerate that rate of growth? And it's basically product features that have sort of viral mechanics. Like I actually bank with Monzo now, which is great. I shut my NatWest account about a month ago. I used to bank with NatWest. My girlfriend banked with HSBC or someone. That was fine, right? It didn't matter that we banked with different banks. There was no viral kind of word-of-mouth mechanic that meant it was useful to get her onto my bank or my housemates. They're all the same. They're all kind of crap. There's no real reason to get everyone onto the same thing. With Monzo, that's different. So we started in January. The average user had about 2 friends on Monzo. Our average user now has about 13 or 14 friends on Monzo. The average user in 1 year brings 3 extra people. So you could say our viral coefficient is about 3 in 12 months. So what are those viral mechanics that mean it's useful to bring your friends onto the same platform? PayPal has one of them. It's sending and receiving money, splitting bills. Venmo is a huge driver of growth for part of PayPal at least. I think the next thing is probably things like joint saving, joint kind of pots, which are bringing out in probably Monday or Tuesday, which is a way to put money aside, but then joint pots. So how can several of us put money together, using those for trips or using those for house shares, sort of ways of pooling money in social sort of ways. That gives you an incentive to bring your friends along. So that's kind of the plan, but we'll see. That's the theory.
So that's the classic. The app becomes more useful for me when I bring other people into my network.
Exactly. It's network theory, yeah, for sure.
Okay, I want to talk about the incumbent banks. Because HSBC are doing interesting stuff. I spoke to, I think, their head of digital the other day. Mm-hmm. They're clearly not ignoring some of the user interface improvements and some of the opportunities of open banking or PSD2, which we're going to talk about at length with the panel after this. And then even people like Metro Bank, I think I've quoted you before, the founder of Metro Bank told me, I asked him straight up, I was like, what value can Monzo, I think I named Monzo, bring to banking? And his answer was absolutely none. Right? And his point was that anything you do, they can copy. Right? So how defensible is this better user experience that you're building and that other people like Starling are building? And why can't the banks just copy you? I mean, they kind of have to.
Yeah. So I actually really like Metro.
It's not what you told me last time.
But Vernon Hill has repeatedly said digital banking has no future. I mean, which is clearly bollocks, right? They're just like provably false. So like saying about 15 years ago that travel agencies are going to stay on the high street and these websites have no future. It's just clearly not true. But I do like Metro. I think they have I think they're sort of a plucky underdog. But they're at 1 million customers. I don't see them going beyond about 2 or 3. But it's a great little business. I think the question of like how you've got these behemoths, these huge banks, Barclays, RBS, HSBC, Lloyds. What stops them? I think the answer for them is slightly different to Metro Bank. I mean, the answer with Metro Bank is their technology stinks. They're on an outsourced IT platform, and they didn't launch an app for the first 3 years of their business because they don't believe in the internet, which is fine. You know, I don't think it's right, but it's fine. For the big 4 or 5 banks, clearly they believe in the internet, but they also have an incredibly profitable business model, with the exception of RBS currently. But the other 4 are generating huge amounts of profit. And the problem there is this new sort of wave of disruptive innovation it cannibalizes the existing business models. And if you're sitting at the top of a very big bank and you spent the last 10 years tuning the business model to spin off cash, and someone comes along and says, I've got this great future, it's going to be amazing, but you're going to take a massive revenue hit for the next 5 years. Do you want to sign up? It's sort of like, well, no, I don't. I want to sit on my current cash cow that's generating tons and tons and tons of revenue, and I'm going to retire in about 3 or 4 years and get a big stinking bonus. And I'm just going to ride off into the sunset. So the problem is these disruptive business models are disruptive. You can't just take the existing business and sort of go upwards. You have to take a massive hit and then rebuild. And I just don't think any of the big banks really have appetite to do that. The problem is if you don't cannibalize your business, someone else is going to come along and cannibalize it for you. So I don't know, I think they're caught between a rock and a hard place. The debate is not is this going to happen? The debate is, when is it going to happen? And for myself and Starling and Revolut, it's we're pushing pretty hard for it to be the next 2 or 3 years. And the execs of the big banks are saying, it's probably 10 or 15 years away. So let's just not react yet. I don't know.
Okay, but in a sense, I'm not sure if that's entirely true. I think some of them are reacting now.
Yeah, I mean, HSBC's new
Yeah.
app is sort of going down that path. But I want to see the point where they start putting other people's products ahead of their own. That's like the key thing, really. Where you can, like, sure, you can have like account aggregation where you show data from other current accounts in one place. But the point at which you're like, hey, it looks like you need a loan. Don't take HSBC's loan, take a loan from Zopa. It's like, that would be interesting. That's where the rubber hits the road, really. There's apocryphal or not stories, depending on who you talk to. One of the really big banks built and almost launched a TransferWise competitor before TransferWise existed. Someone inside this bank was like, the way we transfer money around the world is really, really expensive and broken. Why don't we build this sort of peer-to-peer swap kind of exchange and bring FX rates really, really low? Be amazing for customers. They actually built it, got it working, bought all the marketing, and was ready to launch it when the FX head of this big bank found out about it and was like, what the hell are you doing? And killed the entire project. It's like, do you know how much money we make from foreign exchange? Why would we ever launch this thing? It's like, oh, it's because it's good for customers. It's like, it's terrible for revenue. And this was probably 7 or 8 years ago. And it's probably the right approach, right? They've had 7 or 8 years where they've made tons and tons of revenue. But they, TransferWise have come along and built a £1 billion business. So.
Now, you've mentioned to me that there's a midterm aim, I guess, which is to launch in America. And your recent investors all have a certain American emphasis, shall we say.
Little accent.
Yeah, little accent, yeah. And shed loads of money. But I'm just wondering why America? I know this is a midterm aim, and why not Europe?
I don't think they're exclusive. So it's not that it's not Europe. It's just that America takes longer. I actually do think America is probably more attractive, but we will probably do both. America's more attractive because there are 300 odd million people, and their banks are really, really bad. And they speak the same language, and they broadly have the same service providers. Not all of the same, but broadly the same. Whereas if you look at Europe, and assuming you're taking a kind of marketplace model where you want to go in and analyze data and sort of suggest better products, doing that in France versus Sweden versus Portugal is very, very difficult. Like 3 different languages, 3 different ways about thinking about your money. I mean, for example, Germany loves cash, France uses cars, the Nordics use this crazy bank-to-bank transfer thing. They're each different markets, they're different languages, different cultures, and then the third-party service providers are all different. The US is actually pretty homogenous, pretty affluent. I mean, if you were to look for a huge homogenous population, you'd probably look at China, I guess, or India, or maybe Indonesia. But sort of a Western affluent audience, you can't really beat the US. Historically, I mean, as in the last 10 years, it's been almost impossible to get a new banking license. That's changing. So Winter Park Bank in Florida just got a banking charter about 3 months ago, the first in 10 years or so, and there are another 3 or 4 in progress just now, which is a huge, huge change from 10 years when there'd basically been a moratorium on banking licenses. So we will also passport across Europe, but at the moment our UK license it does work. We can passport it to European geographies with all the difficulties we just described, but with Brexit, it's unclear if that passporting right will continue. So we'd have to open another office in, say, Ireland to keep that passporting right. So it's just uncertainty is painful.
Okay. And there's no, you said about opening an office in Ireland, just to clarify. That's,
I'm going to get so many emails from the Irish Development Office like tomorrow. There are no immediate plans to open an office in Ireland.
Okay.
Those won't stop the emails.
Awesome. I don't know how we're doing for time, but I think...
7:35.
What time do we start?
7:05.
Okay, so I think it's panel time. And this is where I think it's going to get...
5 more minutes.
Really? Okay. So the attack vector.
Yeah.
This will lead us into the panel.
Okay, great.
Right, by attack vector, what you meant was that there are a bunch of fintechs that are vying to be the financial control center, if you like, for a user. Correct?
Yeah, correct.
And they're coming from different angles.
Yeah.
So your initial one is, hey, this tool budgeting prepaid card stroke current account. Obviously current account really, but 470,000 customers losing your money.
Don't know that yet, yeah.
It's a beautiful thing. And then you've got other companies like, I guess, Revolut came in via cheap foreign exchange fees, correct? Yeah. There's other ones coming in via like long-term savings products. Is that also correct? Yeah. So why is it so attractive to be that financial control center? And isn't that what the banks already have? I mean,
for sure they do.
They've got my trust, they've got my money, they've got my laziness.
They just don't know what to do with it.
Okay.
So, I know there are a number of questions there, I guess. It's like, is the Holy Grail really the Holy Grail? And what is the best attack vector?
Yeah.
So, I think that the sort of end goal being the interface between the customer and all of their money is a hugely attractive place because the internet's really good at creating platforms where you get, like Amazon is a platform, Facebook is a platform, Google most is a platform. You tend to winner takes most in a given sort of area, which is hugely defensible and it ends up being hugely profitable. You deliver a ton of value to the customer and also make a ton of money, of profit. And banks typically haven't had that model. They've been balance sheet lenders. They take deposits and they lend them out. And they sort of service niches. They don't have these very strong network effects that increase at scale. And so this sort of like, this new fintech model is to be a platform or a marketplace with true network effect, which has sort of winner takes most mechanics and really, really benefits at scale. And also doesn't have the huge capital requirements a normal bank would. So as a bank scales, it has to hold more and more and more investor capital. As a sort of marketplace model without very much balance sheet lending, you hold much less capital. So I'm not sure if that proves the argument. That's why people are interested in this kind of being the control center. And then it's like, okay, so what's the best attack vector? I think the savings accounts providers are not the right attack vector. The reason for that is the level of interaction between them and the customer is very, very limited. If you're offering a 2-year savings deposit account, like you put your money in at 1% interest, and you come back in 2 years, you put £1,000 in at 1% interest, you've earned 20 quid in 2 years. Your interaction is like once per year. Like you put your money in, you come back a year later and take the money out. You don't have this sort of day-to-day interaction. Something like a current account, our customers will open the Monzo app typically about 15 times a week, so twice a day.
I check Nutmeg every day.
You might be a little abnormal,
okay,
Steve.
Yeah.
So it's, I don't know, just having that regularity of contact allows you to have a different relationship, I think. So it's something you've got to use day to day, something ideally you'd use with your friends, it touches your sort of, your finances, I guess. So that's why we've chosen it's the attack vector.
And those who are the financial control center essentially own the customer, right?
Yeah,
and
that's a phrase that banks use, and I think it's a really shitty one, actually. I think like you are the trusted servant of the customer. I think saying we own the customer has this like ring of entitlement, which leads you to do really, really shitty things.
See, who feels owned by the bank?
This guy.
Okay, let's start the panel.
Great.
Yeah? Awesome.
Thank you.
So this is the first part of the talk. We just want you to know that we don't ignore your questions. You can keep asking your questions on Slido. It's very simple. You don't have to do anything complicated. You just pull out your phone and open your browser. And in your browser, you just type in slido.com. And the hashtag for tonight, as you can see, is SG Europe. And you keep asking your questions. Basically, we will now go into the panel, and then we will answer the questions at the end of the panel. Also your current questions and your new ones as well. So now this panel is going to be joined by 2 new people. The first person who will be joining us today is Megan Caywood. Megan is the Chief Platform Officer of Starling Bank, another challenger bank in the UK. And the last person for this panel is Barney. Barney is the founder and CEO of Cleo. So let's hear it from these guys. There you go.
Okay, so going to start. My first question is directed at Barney. Now, you were one of the first people to try to convince me that to offer a banking type experience, or at least put the user in control of their money, you don't need to be a bank. So why are you right and Tom's completely wrong?
Thanks, Steve. I think fundamentally there's kind of two real big problems building a bank, and it's a distraction. It costs a lot of money. It's a lot of stuff you're building that isn't serving the customer when you're building a bank. And I think the second is it's hard to make the business model work. It's hard to build a high margin, big business when you're building a bank. And I think fundamentally it means that you have to push a lot of products onto your customers that may not be the best thing for their customers. So I think focusing on the customer, focusing on the intelligence, like that is how you build a big company in the space, and I think someone will.
And just for those that don't know, if Cleo isn't a bank,
Cleo's not a bank.
and it's not just an annoying chatbot,
No, sometimes. Sometimes.
what is Cleo?
Yeah, we're building an AI that intelligently manages your money for you. So you can ask Cleo questions, she helps you save, you can pay friends. We're just trying to build the interface.
Hold up.
Sorry. There you go. Yeah, so yeah, we're building the AI that will intelligently manage your money for you. That's the tagline.
Okay, do you want to elaborate a little bit so you can do things?
Yeah, sure.
I mean, it's actually pretty cool.
Yeah, no, it's cool. We've got 90,000 customers now. We're growing 7% week on week, so that's pretty cool. You can pay friends, save money. She'll categorize your spending for you. I think fundamentally where we're trying to go is we want to have this holistic service that kind of Tom was talking about, being the interface that manages your money for you and helps you get better products and services that's right for you. So that's kind of where we're going.
Okay, and I think what you told me before that I thought was pretty interesting. So Cleo is this. Does anybody here use Cleo? It's like a Facebook Messenger. Okay. Have you ever typed into Cleo, who is Barney? If you haven't, do it. Maybe not now. It'll be quite distracting.
Thanks, Steve.
But you can basically do things like you can check your balance. You can see what you spent by category. It gives you a little heads up if you're going to go overdrawn or you're spending way too much money this week. As you say, you can pay friends. You can even switch energy providers, I think.
Sure.
But what struck me is a few months ago, you told me that your users were using it instead of their existing banking app. So in that sense, you are completely in competition with Megan at Starling and Tom at Monzo, correct?
Yeah, sure. Tom's right. Like we're trying to go for the same thing. Fundamentally, everyone wants to be the interface for financial services. And I think focusing on the customer and solving customer problems is how you win in this game. Building a bank is hard. You've got to deal with the regulator. You've got to build all these systems and services. Like what we get to do is just focus on the customer and solve customer problems, which is exciting and it's good.
Okay, I'll let you reply in a minute, Tom, to his arguments. But Megan, obviously you're head of platform, so in a sense you get to work with everybody, right? Like both people that potentially compete or offer some services that overlap a little bit, as well as some of the pieces that I know Starling doesn't want to do. Your whole team's been very sort of steadfast on that you just want to build a current account and other financial services can slot in, which is not dissimilar to Monzo either. But perhaps for the audience's sake, can you explain what marketplace banking is on a sort of higher level?
Definitely. So it really echoes actually what Tom was saying earlier. So we want to innovate on the current account. We see that as a huge opportunity to offer people a better experience in the bank accounts today. But what we see is that when you look across FinTech, there are a lot of different companies who are also working to innovate in the space. So TransferWise being a great example. And for Starling, we can't be the world's best current account and mortgage and insurance and foreign exchange and all of these different companies at the same time. And so the marketplace is where we basically integrate in all of these companies from across the market to basically give our customers choice and access and transparency. So that way, whether you're wanting to use TransferWise versus Zopa versus Wealthify or any of these other companies, you can still access that via your Starling account. And the way that we set that up is we want to create basically a network effects platform. So that's where it's a very scalable model. It enables a number of different players to plug into it. And the more fintechs we have on the platform, the more it benefits our customers because it drives competition, which drives down price. And the more customers we have on the platform, the more it benefits those who are selling their products because it's a stronger channel to reach customers. So something that's really sticky and really beneficial to both the customers as well as our partners. But basically what we found is with open banking and these other pieces of legislation, what the government did is they did this industry-wide analysis on traditional banks. And they found that only about 2% of people switch their current account. So the joke is that people get married more often than they switch their current account. It's this kind of ongoing joke. But when they did an analysis of that, the reason why is because banks had too complex of fees for customers to really understand what they're having to pay for a product, much less to compare the product to understand where they could buy something better for them. And traditionally, that's how banks monetize those. They incentivize you to join the current account, but then they make money by upselling you on these higher profit financial products. Since we're a challenger bank and we are mobile only, we have way different operating costs. We don't need to monetize via upselling these other products. So that's where we see this huge opportunity instead to basically give our customers choice. And so from within the marketplace, it's almost like an app store of financial products. You can select from insurance and wealth management, mortgages, and so on and so forth, and then basically helping to compare those options. And then with Starling, because we have a lot of information that you've already had to enter to set up your account, if you authorize us to do so, we can just share that information with the partner to help streamline onboarding of that product as well. So it makes it increasingly easy to access other financial products as well.
It's actually pretty cool. When you use Starling to effectively authenticate with a third-party app, it's like just like Facebook login.
Yeah.
Right.
Yeah. Well, so what we found is when we were starting Starling, as we were building, we were looking at the pain points that people have with banking. One of them was just opening a current account. Particularly me moving over from America, it's exceptionally hard as an expat because you have to have, a utility bill from your apartment to prove that you live here, but you can't get your apartment until you have a letter from your bank, and it's this whole circular thing. And you have to make an appointment in a branch location, go in with a number of documents. So for us, one of the first things we solved was being able to open a current account from your phone in less than 5 minutes. But then additionally, when we talk to customers, it's also really hard to open all these other financial products. And a lot of the information you're filling out is the same for all of them. So if we can help share that across when customers authorize us to do so and streamline the process of accessing all of these other products, then that's also hugely beneficial for the customers and makes things easier for them.
Okay, so marketplace banking, I have my current account, or whichever attack vector I've gone via, and then I can basically add all these cool third-party services that do potentially one thing and do it really well, and I'm not just being upsold by the bank.
Yeah,
that's the theory.
Yeah,
right?
yeah, that's what we're going for.
However, what I've already noticed is that a lot of these so-called marketplaces, for which Monzo, you're developing one, Starling, and even Cleo to a certain extent, they're not open marketplaces entirely, or certainly not the bit that resides within the app itself. They're either partners, where maybe there's one partner per financial service, so there's one FX partner, there's one mortgage partner, there's one savings partner, or maybe there's a couple, in which case they're more like a curated store, which I think is probably the Starling approach. But that, in a sense, is like upselling me a product, just like a bank, right? It's like, okay, now you're pushing me to sign up to TransferWise, or you're pushing me to sign up to Nutmeg or whoever.
Yeah. So that's why we basically, in this marketplace model that we're very early on the mission of building out, we look to basically never do deep integrations, like white labeled solutions. TransferWise and foreign currency is often one side as a type of deep integration you could do within the payments portion of the app. But the way that we've built it out is for each category in the marketplace, you have all of the different partners listed. You can see basically an app store description page of that partner. But then whenever you go to use that partner, you actually have to go into that partner's application. We very much feel like, back to that, do you own the customer? We feel like we do not own the customer. In fact, the customer owns their own data, and it's just up to us to help them share that securely should they choose to do so. And so what we do is we've built out basically a dashboard of pages so that whenever a customer uses one of these other products, they can easily sign up, we can streamline the onboarding, and then they can share that data from that product back into Starling to create a dashboard. And what that dashboard does, it just gives a level of high-level data around that partner, what they're, for an example, in a savings and investment partner, just the total amount that's been invested, the total amount of growth, if you have a standing order. You can do simple actions like adding money. But what that means is it's very scalable. So basically, any partner who comes to us that has APIs and is compliant can easily plug into our model. That way we can get to scale and we can get to a number of partners. I totally agree with you. If you only have deep integrations, if you only have 1, 2, 3 partners per category, that's not actually that different from what the traditional banks are doing. Because often what they do is they don't specialize in insurance either. So they'll integrate one other person, then they upsell that one other product, and they get some sort of fee for doing so. And so for us, where we see the real differentiation is not in just switching or not in just deeply integrated products, but having this very scalable model where anyone can plug into this marketplace.
Okay, Tom, is your approach going to be, how open is your marketplace going to be?
It's a question that we're still debating, I think. In the ideal world, the real limiting factor is the technical sophistication of the partners. It's not our willingness to onboard partners, it's their ability to actually like get their shit together and like, you know, make it happen. And so I don't know what the answer is. And there are a lot of models out there you can go and look at. You can look at the Google Play Store, which is basically like free for all. You can look at the Apple App Store, which is like more curated, or some of the banks which like pick sort of what they think of best in breed and even white label it. So like there are a bunch of models. I think the approach we are tending towards is setting like basically just a number of principles. Like you should have clear, transparent pricing. You should have customer service that's available 24/7 via in-app chat. You should have sign up that I totally agree with, like the ability to sort of passport your identity data across so you don't have to go through 17 pages of onboarding. And if you meet all those criteria, you can be featured and it will be a sort of a 1 or 2 click integration that helps you sort of take up this product very, very quickly. And then, frankly, we'll just list all of the others. It's like, sure, if you want to go and switch to npower, like, be my guest. It's going to hurt.
Okay, but okay, I hear you. That sounds great when you're a startup. But as you have more pressure to reach profitability,
Yeah.
like, what's going to stop you going, do you know what, you know, this savings product or this mortgage product or this FX product offers me a much higher affiliate fee for every customer I sign up for, right? So I'm going to push that one ahead of the others, right? I mean,
Yeah, for sure.
that makes logical business sense, but then you're back into bank territory.
It makes short-term sense.
Right.
That's just a really fast way to destroy customer trust. It's like, yeah, we could start screwing our customers over. And we would make more money in the short term and we would die in the long term. And so I think we take the same approach which we have for the last 3 years, which is just transparency. We will tell you how much we earn of each of these partners. We'll also tell you how all of our other customers rate each partner. So if you want to go for the one who pays us a ton of money and everyone hates, like, go for it. I mean, and frankly, they won't be on the platform very long. So I don't know. You're right. There's a tension there, and it is a complicated question, but I think it's one we have to address sort of head on.
Barney?
Yeah, I think the next level of this is when it kind of does it for you, when you don't actually have to get to a marketplace and pick products, but when it finds the best product for you and it switches you automatically. I think that's where we should all be trying to go, and I think that's the best thing for the consumer.
But so what happens then if, like, how does the algorithm balance between the one who's paying you, like Cleo, the most, and one that customers like the most?
Yeah, no, great question.
Thanks, Tom.
And it's just what makes the most sense for the customer, what makes the customer the most money, and I think that's fundamentally what you got to do.
Well, just to reply to that, I think there's 2 important pieces that you have to implement to make this marketplace successful. So one, like Tom said, the burden will be on the partner to do a lot of the work to integrate. So one of the things that we're looking at from having the dashboard perspective is they only need a few public APIs in order to do this. So it's a really lightweight for both us to integrate the partner and for them to integrate in. If you do deep integrations, then it's it's like how tech was 10 years ago. You end up being one company that's very heavy, very vertically integrated, trying to perform lots of different functions. When you fully integrate them into the app, you also have to take on the risk, and there's all of these other kind of components that make it very slow and hard to scale. But if you make it such that it's easy for the partners to be part of that, and then you have standardized pricing, so anyone offering the same product will pay Starling the same amount, all of a sudden that discrepancy disappears.
Okay, so that makes sense. So I just want to get back to this bank versus non-bank argument. Because it strikes me as well as providing like a different user experience with Cleo for a chatbot, as you say, you're trying to move to that same kind of marketplace, then eventually something more intelligent that will just simply do the work for you, which, by the way, as a lazy person with no interest in my finances, I love. But I still want to know what it is that what Cleo can do by not being a regulated bank, that a regulated bank, albeit a very cool new one, can't do, and vice versa. Like, I haven't quite figured it out. Been covering this for years now.
It comes to scaling as well. It's really hard to get a banking license in every country and become a big business. And I think Tom's done an amazing job, and it will be a £1 billion company. But if you want to build the next Google, the next Facebook, you've got to do this internationally. And I think that's being the interface and building the intelligence that really helps you to do that. And fundamentally, it comes back to the focus as well. If you're building a bank, you're not focused on solving customer needs. And that's how you build a business. You build a product people love that they use weekly, daily, and that's what we're trying to do. Okay, and Tom, why can't you get beaten by these banks that aren't really banks?
Oh, I think we definitely can be beaten, for sure. I don't know who's going to win. I think the theory that you can do this without being a bank is tremendously appealing. And frankly, in 10 years' time, Monzo might not be a bank at all either. The reality, though, today is to try and put a layer on top of the banks is like putting lipstick on a pig. The data underneath your sort of interaction, your sort of interface is really slow and really limited. For example, you go to a shop and you make a contactless transaction. It appears in your account about 2 or 3 days later. And so if you are the layer on top, you're not real time. You're 3 days out of date. And you don't get the 150 pieces of information that MasterCard or Visa send through. You get 1, maybe 2, the price and the 16-character identifier. And so the amount of information you can give to your customer is really limited. If the bank's technology systems were really, really up to date and real time and rich, absolutely you could build a Monzo or a Starling on top of the banks as an API sort of interface layer. The reality is the technology under these sucks, and those APIs don't exist today and won't exist next year under PSD2 either. As much as we hope they will, I think it'll take them 5 years to get them really, really effective. And so, yeah, in time you can do this without being a bank. Today you can't. And so, yeah, it's expensive and it's hard. And you have to risk and compliance and talk to the regulators about 3 times a day. But once you've done it, once you've spent all the money and got the banking license, you're then in a really awesome position because you're masters of your own destiny. You can actually build this stuff and sort of move very, very quickly.
Okay, so I get it. You have to get the license. You have to build your own banking stack so you can innovate essentially at your own pace and have your own destiny in your own hands.
Yeah.
That's essentially what you're saying. Barney, I'll give you one more chance to come back on that. How come you can innovate? It sounds awful, working with this terrible data that comes through, 3-day late transactions, you don't own the banking rails.
Well, it works already. We've got 90,000 customers. It's growing 7% week on week. It fundamentally works. And I think, with open banking, that is a great opportunity for the customer and for Cleo as well. Starling has an API, which is a great API. I hope Tom will release the API someday. That'd be nice. But no, it
Very
works.
soon.
Okay, so just to clarify, by open banking or PSD2, what we're talking about here is that under new UK EU legislation, is it January next year?
January the 8th?
Yeah, allegedly.
Is that right?
Um,
Somewhere, yeah.
The major incumbent banks first round, that's correct, isn't it? They go first.
CMA 8, yeah.
Have to make have to basically release some kind of API, I think, and make their data accessible for the customer to grant third-party apps access to it, and also at the very highest level, let a third-party app actually take money out of your account. Is that right?
Move money
Yeah,
around.
move money around.
I mean, the principle is if the customer can do it via the app or the website, a third party should be able to do it with permission from the customer.
So that is going to make it even easier. For
If it
someone to
works.
come along. Okay, if it works, we'll get to that, yeah. I've heard this defense. Tom likes to tell this story about how you'll try to authenticate a third-party app, and then your bank will have to send you a letter in the post with a PIN code. It sounds awful. I don't think it's going to be quite like that, as convenient as that
I don't think
sounds.
that's probably Mike Kelly's story or Stevie Graham or someone like that, but I repeat it probably.
Okay. We talk too often, clearly. But surely once that comes in, presuming it's not a piece of crap initially, and the banks don't try and slow it all down, that means it's going to be even easier for someone to come along and say, I like the user experience of Monzo, I like the user experience of Starling, I don't want the regulatory overheads, I'm going to just build a really slick front end and authenticate via PSD2 open banking, and which is what basically Barney's lining himself up to do. And then I'm away, right?
For sure.
Yeah?
Yeah,
So he
that is the
wins.
theory. But still, you use your card and it appears 3 days late. Even with PSD2, it appears 3 days later, and you still only get the statement descriptor and the amount, not the 150 pieces of information that exist. And things like, oh, I'd like to freeze my card because I've lost it. Oh, PSD2 doesn't have an API for that. It's fine. And I think in 2 or 3 years, it will be really powerful. I think in January of 2018, it will be limited.
Megan?
But I would say that's part of the reason why, so the fintechs, so the question like, will the fintechs beat Monzo? Will Cleo beat Monzo or Starling or anyone else? The answer is no, because at the end of the day, each of these different awesome fintechs still rely on banks. So my entire career is in fintech. And what I found when I met Anne, originally our CEO, is I was so compelled by her vision because fintechs are innovating and doing amazing things, but at the end of the day, they're all still relying on banks. That's still the core functionality. And like you're saying, so Cleo can now pull in, your whatever Barclays, HSBC, whatever account, but it's still going to come in 3 days late. It's still going to have those core problems still there. And so as a licensed bank, that we have this great opportunity to build a full stack bank, get the full banking license, we can really start to innovate on that. But we don't see it as threatening that people like Cleo can integrate those services. In fact, not only that, but it's a huge opportunity. Because what we see is banking isn't just something you do in your bank account. It's increasingly just becoming synonymous with the way you live your life. You're doing it in your Messenger app. You're doing it at the point of need whenever you need to send money or do whatever it might be. And so increasingly, one of the reasons why we built out our API whenever we first launched is so that our customers could easily access Starling and connect it to these other apps like Moneybox or Cleo or Tail or whoever it might be. But there's actually a benefit in helping customers to have this very connected ecosystem of financial products. That's actually where the benefit comes in.
Okay. We've got only about 3 or 4 minutes left. I want to do a couple of quick questions. First one, who should the incumbent banks be more afraid of? The fintechs, like you guys, or a Facebook or a Google or an Amazon?
I would say the fintechs, the combination of challenger banks and the fintechs, because that's what provides something really compelling. So like 5 years ago, if you were to go to any of the banking conferences, everyone was talking about, the disruption of fintechs and how they're going to disintermediate banking. And that wave kind of came through, and then they're like, we're still here, it's fine. But now what you see is there's challenger banks like Starling and Monzo that have this opportunity to really disrupt not only the core of banking, but to integrate with these fintechs to provide a totally new experience. And so I think from our perspective, it's that combination of fintech that will be most powerful. I suspect Facebook, Google, Amazon, and others will want to compete in this area, but likely in terms of integrating with banks, integrating their APIs. So under PSD2, basically it says that now your bank can connect directly to Amazon, which right now they have to go through like a merchant acquire. There's about 20 bips of cost that's on that. There's a cost that they have to pay to accept your payment via a card. PSD2 mandates that they don't have to do that. They can just connect directly into the bank account. So in terms of enabling that type of disruption, that type of access in the payments area specifically, I think will definitely happen. But I think it'll be the fintechs who are providing something quite notable.
Okay, just quickly, Tom, do you agree?
I I don't know. I don't worry really about the banks, the big banks, or Amazon, or Apple, or Facebook, or Google, or really, I think these guys are doing a great job. I worry that because we all agree on the end game, we're wrong. I worry that there's a model out there that we haven't spotted, that someone else has, or maybe even hasn't yet spotted. And they'll spot it in 6 months or 12 months and build something that totally wipes out not just the big banks, but also us. We frankly don't spend a ton of time looking at the competition or the big banks. It's just sort of like wondering if we've kind of missed the big opportunity and someone else is going to spot it. That's the thing that really keeps me up at night.
Barney, do you have a view on this?
No, I agree. I don't think the Googles or the Facebooks want to play in a regulated industry. They shy away from this kind of stuff. I think they'll play in payments, but they don't want to do the whole service. It's and I think it's someone in this space is up for grabs. And it will be a Google-sized company that comes out in the next 5 years, I think.
Yeah, I agree with that. It's just like, I agree with that. It's just sort of, how do you get there? Is it like a new cryptocurrency startup? Is it like some ICO sort of, rocket fuel on a crazy idea? Is it like a lot of the really biggest sort of ideas have not come from sort of incremental improvement on what came before? It's just like a total reimagining of what came before that no one saw coming. Mm-hmm. I just worry that's happening, or that might happen. That something no one has spotted just comes in and totally demolishes the entire market.
Okay, that's a great note to end it on. So, we're all in trouble. Yeah. We can have some questions from the audience, I think.
So this is the part where we also interested in knowing what you're thinking, and we're gonna take some questions from Slido, and we're gonna mix it also with some questions from you in person. So the first question here is to Tom. Tom, when will you be able to spend Bitcoin using Monzo?
I mean, my response is why do you want to spend Bitcoin? No,
That's the answer right there.
What actual advantage is there of spending Bitcoin? It's just not like a really useful fiat currency. The main two uses of Bitcoin for me right now are massive speculation on a really volatile asset and buying illegal drugs and pornography. And you can argue about, is that a good or a bad thing? But we live in a society where basically the vast majority agrees the government and banks should be tracking people's spending, right? And so, and probably most people here do not agree with that, perhaps, but that's the society we live in. Okay. So, I don't know, not anytime soon.
Yeah, that's a fair point. Please, quick answers, quick questions. The same question for Starling?
Same answer, yeah.
Same answer. Barney?
Yeah, same answer.
Okay, so next question is, what is your vision for Monzo in 3, 5, and 10 years? Tom?
3 years. Profitable, 20 million customers, 5 years. Really profitable, 100 million customers, 10 years. Really profitable and doing really good work with 1 billion customers.
Great.
Still giving me the exclusives?
Still giving Steve exclusives.
Steve, do you agree with that?
Definitely exclusives. No, I think I really believe the next couple of years are going to tell us if the 5 years is right. I think with PSD2 and open banking, there's literally a gold rush. I think Barney put it very eloquently in my last coverage on Cleo. Won't repeat the words he used. But everybody's putting money into this space. I mean, you said that we're in a bit of a bubble, I think, Tom, with FinTech.
Did I use those words, Steve?
I think I said, we're in a bubble, and you said something.
Okay.
Maybe not. But yeah, so I think in 2 years' time, we're going to know, there's going to be so much activity.
The water's going to go down. We're going to see who's been swimming with no swimwear on.
See that. So the same question to Starling.
So similar in that we're looking to grow customers, grow revenue. We're also looking to bring the marketplace to fruition, of course. We also have another part of our company called our payment services division, which is how we have a payments offering basically for fintechs to connect into payment schemes. Sometimes people refer to that as like the Amazon of banking, growing that out additionally. And then also we've started going international, so we just passported into Ireland. Happy to have the Irish office.
Congrats,
Big
yeah.
fans of the Irish.
Congratulations.
We aren't planning to go into the States first. So as an American, I would highly recommend, again, it's very fragmented. It's not homogenous. You have to go state by state by state by state because there's different regulation per each state. So we're planning to do Europe first, just as our own strategy.
So expansion, and then what's the big goal for 5 years from now?
Yeah, so that's really 5 years, I would say. So focusing on international expansion, as well as we're also launching business current accounts. So that's what we're working on really for next year, I'd say.
How about Cleo, Barney?
Yeah, we're just focused on building the best products we can for the next 3 years. Going to America before Christmas, which is pretty cool. And just keeping growing, like 7% week on week, just keep doing that.
Great. A quick next one. How can consultancies like Kepco work with Monzo? Tom. Do you guys know Kepco? It's a big fintech consultancy working with probably all the banks in the world. It seems
very
like not
tricky.
Monzo.
I used to be a consultant, so I have a real suspicion of consultants.
Okay.
I knew you were
So
going
the
to
answer
say
is no. Is the answer no or maybe?
No.
Okay.
The answer is no.
Megan?
We have no plans either now.
Okay.
Yeah, no plans.
Okay, no plans. Cool.
You make so much money off the big banks. Why bother working with the small ones?
Fair enough. Let's take 2 or 3 questions from the audience in person. So raise your hand if you have one. The fastest guy was this guy here. Please stand up and tell your name and ask question.
Sure. Hi there, my name is Andre. Probably question for Tom. About crowdfunding, so you did a massive round, but it was limited. So for example, companies like Brewdog, they are raising more and more and more money.
Yeah.
Do you plan to do more rounds, and why did you actually limit the first round?
So we limited the first round and didn't offer as much crowdfunding in this round as we would have liked because there's regulation on crowdfunding, which means you can only offer 5 million euros of crowdfunding, which is about 4 million pounds. To get around that, you have to produce what's called a prospectus, which is a really very long, complicated legal document, which we're in the business of producing right now. It's going to take about 6 months and cost us a couple of £100,000. That lets you. That's basically a really detailed description of your business that you then give to the public, and you can basically raise unlimited money. It's almost halfway to IPOing. We're not going to IPO. We will issue the prospectus so that we can raise a much, much bigger crowdfunding round next year in 2018, probably 10, 20, 30 million pounds. It's really important to us to have crowdfunding, but we're just limited by regulation on what we can do right now without prospectus.
Okay, thank you. Next question.
Hi, my name's Josh. You're going to have a load of data. Do you plan to monetize that data in any other way, via advertising, for example?
Yeah, we're going to sell it to private equity and let them trade on it. No, we are not, right? So we have a ton of valuable data. We also have all of your money. We are trusted custodians of not just your money, but your data. If we flogged it to people, you would lose trust in us and we would be out of business. We take it really, really seriously. And so we will not sell, transfer, or give your data to third parties without your consent. That is our promise. But there's a ton of value that potentially can be unlocked. So when we figure out some way that you can save money, we'll come to you and be like, hey, you're with British Gas right now. If we can share your data with a price comparison engine, you could save 200 quid. Do you want us to share it? And you opt in. So does that answer your question? I'll take that as a yes.
Okay. So now, last question over here.
Hi, my name is Anya. I've got a question for you. I imagine your demographic is obviously a lot younger. I'm guessing like under 30. That's your sort of average client. How do you plan on targeting people with maybe that are older with more spend and obviously to get bigger tickets without spending money on advertising or marketing?
So our average customer is 32 years old, although half our customers are under 30, just as like a really long tail of old people who skew the average up. Like the unifying characteristic is you live your life on your iPhone. I'm actually an Android user. You live your life on your smartphone. That just happens to skew younger. we also don't need every customer. So we're trying to build a bank for the kind of 90% of people, like most people. But if you have really like specialist niche needs, you might be better with Revolut or Coots or someone like that. So,
is it true you had university ambassadors already?
we tried that. It didn't work super well. We'll try it again, I guess. That doesn't directly answer your question. I mean, I think we can get pretty big with the sort of 20 to 50-year-old market. I don't know.
Let's take the same question to Starling Bank.
Ours is a bit different. We definitely see a younger skew as well, kind of that traditional early adopter, but we actually see a really big segment that is 60, 70 plus, which is kind of interesting. And so we were looking at why are we getting so many, it's a pleasant surprise, but we were kind of wondering why is it a bit more age agnostic than we'd expected. Our hypothesis is that because what we're really looking to do is to just make banking easier. So opening an account, making payments, everyday management, locking your card if you lose it, that it has wide applicability. It's not just for the classic early adopter who happens to be 28 years old and living in London and working in tech, which is a good thing. But yeah, we expect as we continue to grow our customers that segment will increase as, naturally when you have early adopters, they tend to skew a bit younger.
Okay, thank you. How about Cleo?
We're actually focusing on 20 to 30-year-olds. We think you can build a really big business in that segment. And that's just what we do at the moment. I think you can build a huge, huge business globally, serving 20 to 30-year-olds. So that's what we do.
Barney once told me I was too old to understand chatbots.
Who is using Cleo here? Raise your hand. A few. I use it. I love it. It's very nice. On this note, Steve, you want to give a final word to us?
Just keep on doing cool stuff, people.
Cheers, Steve.
True. They're doing good stuff. Please join me in let's put our hands together for Steve, Tom, Megan, and Barney.